Bureau of Internal Revenue is resuming the issuance of letters of authority or LOAs and mission orders, ending a 2-month suspension prompted by complaints of misuse. BIR Commissioner Chadlito Mendoza said the pause since November 24 allowed the agency to review audit practices, consult stakeholders, and roll out reforms which are now cleared for implementation. The LOA authorizes tax examiners to inspect a taxpayer's records and is required before any audit can proceed. For his part, Finance Secretary Frederick Go said the review led to concrete changes to make audits fair, more predictable, and more accountable, aligned with the administration's big, bold reforms. Safeguards include a single-instance audit rule, generally limiting taxpayers to 1 LOA per year, and online LOA verification via the BIR website. Mendoza assured businesses audits will no longer be weaponized, noting that LOA collections make up just 2 to 3% of total BIR revenues, with most coming from voluntary compliance.
With audits resuming under these improved rules, we call on taxpayers and the public to actively work with the BIR, reach out for assistance when needed, and uphold the compliance so that together we can ensure fair and professional audits for all.
The Bangko Sentral ng Pilipinas posted lower net income in the first 10 months of 2025, weighed by lower revenues during the period. Based on its statement of income and expenses, the central bank's net profit fell 4.3% year-on-year to 108 billion pesos from 113 billion in the same period in 2024. The decline was driven mainly by a 12% decline in total revenues, which led to 231 billion pesos from 264 billion previously. Interest income edged up over 1% to 203 billion pesos, but this was tempered by a sharp fall in miscellaneous earnings, covering fees, penalties, and other incomes, which plunged more than 55% to 28 billion pesos. The U.S. Federal Reserve is expected to hold interest rates when its 2-day meeting concludes later tonight, Manila time. But that meeting is overshadowed by threats to its independence. Analysts say policy debate is only secondary in this meeting as U.S. President Donald Trump continues to attack Fed Chair Jerome Powell for not easing rates quickly. And Fed Governor Lisa Cook, whom Trump fired last year, is challenging her removal before the Supreme Court. During a speech in Iowa on Tuesday night, Trump made a prediction about interest rates once Powell steps down as chairman in May.
He's too late. Jerome, too late. Powell, he's too late. He wants to keep rates as high as possible. By the way, well, we have a great Fed chairman. I think we're going to have one. I'll announce it pretty soon. You'll see rates come down a lot.
The 4 front runners to succeed Powell are economic advisor Kevin Hassett, former Fed Governor Kevin Warsh, Fed Governor Christopher Waller, and BlackRock executive Rick Ryder. Jitters about the Fed's independence are showing up in market pricing, with some analysts pointing it as one factor behind the dollar's recent weakness. The dollar index, which measures its strength against 6 currencies, hit a session low of 95,566, the lowest since February 2022. Trump shrugged off these concerns, claiming, quote, "The value of the dollar is great." The Philippines stands at a perfect policy crossroads. Weak 2025 growth, a pivotal Fed meeting, and the Bangko Sentral deciding on its key rate in 3 weeks. With us now live from Hong Kong, Citigroup Global Markets Head of Emerging Market Economics, Joanna Chua. Jo, good to see you and welcome back to the program.
Hi, Cathy. Nice to see you.
Okay, so what do you think the tone of discussions are like as the FOMC meets behind closed doors with Trump hot on the heels as Powell goes into the final stretch of his chairship?
Well, as you said, Cathy, the market is overwhelmingly expecting that there's going to be no change. So I think the actual action, given all the data that we've had, and we've already had 3 consecutive cuts coming out of the Fed, we've seen lower unemployment rate, we've got pretty low jobless claims, we've got pretty solid consumption. So I think the details on the data going into this meeting, notwithstanding inflation being somewhat a little bit softer, probably the path of least resistance is just to be on hold. But I guess, like you said, the key question is really what will be Powell signaling in terms of further policy policy action. And right now, our base case is, although Powell will be encouraged that unemployment rate fell to about 4.4%, we still think he's going to indicate a meeting by meeting approach, and therefore we'll still keep the option of further rate cuts alive. And the reason why we think that is, if you look at the dual mandate of the Fed, even though unemployment rate surprisingly went off a little bit and there was some backward revision, that the monthly run rate of non-farm payroll is still relatively low. And not to mention, we're still running at about 50K a month. And then usually we have these big swings and downward revisions as well. So I think there's still a risk that the labor market will continue to weaken, notwithstanding the pretty low unemployment rate. And, again, I think the other issue is that inflation at the moment doesn't seem to be a big concern. As I mentioned to you, some of the data coming out of the US, at the margin, core PCE is kind of running at about 2.8%. So it's a little bit lower than what the standard economic projections was that the last time we got out of Fed. But, I think that's why inflation's not a big issue. And so it's all really about labor market.
That
so I
meeting
think
by
we might
meeting
still keep it
approach,
alive.
Joe, how do you think the Fed's decision in 24 hours is going to influence the Banco Central and how it decides on February 19th?
So at the moment, we actually think the Banco Central is going to be cutting rates. And the reason why is, notwithstanding the hawkish cut that we had in December, it's really all about the economic data coming out of the Philippines. And look, we've got GDP numbers coming out tomorrow. And our forecast, we are actually below consensus on our real GDP growth forecast. We think the economy is going to even slow further from 4% in the previous quarter to 3.4%. So we are actually below consensus on our GDP growth forecast for 4Q. And the real issue is, this whole kind of ramification post the flood control scandal. Right now, when you look at government spending, it's still very weak. And private sector sentiment is still very weak. You look at confidence indicators, et cetera. So we think that if BSP is really looking at, the totality of the fact that inflation pressure is not really a concern and growth continues to be well below potential, we still think they will cut. Now, it helps also, maybe it helps at the margin, that because of all the noise coming out of the US lately, not just as what you mentioned, the Fed independence concern, or even the noise out of the Greenland issue driving diversification, we've also had quite a bit of a soft dollar. Right. So to the extent that not that BSP necessarily looks at peso, but to the extent that we don't have to worry so much about policy action influencing too much volatility on FX at this juncture, with the dollar being softer now, I think that will also give BSP to cut rates.
Well, let me pick up on that softer dollar,
end.
Joe, with the Fed where it is now, and we're talking interest rate differentials here because we're all not expecting the Fed to move. How much wiggle room does the Banco Central really have to cut rates without triggering the renewed pressure on the peso?
Right. So we actually think that this is, right now our base case is, for now, we think this is the last cut. And then from here on, it will be much more data dependent. Now, if the economy doesn't rebound further, there's still a possibility of an extra cut to 4%. But our baseline is terminal rate is at 4.25%. And at the moment, when we think about rate differential with the Fed, again, given where we are in the inflation cycle, usually Philippines really worries a lot about FX to the extent that it provides a lot of exchange rate pass-through risks on inflation. And at the moment, although inflation is, moving higher, if growth remains weak and underlying core remains weak, I don't think that will deter BSP from cutting further. And anyway, at the moment, although the Fed is pausing, the market is still pricing in, a little bit less than 2 cuts. So the market is still pricing 2 cuts. And in fact, we still expect, notwithstanding the data, we still think the market is too complacent, that the risk is that the Fed could actually cut more. So it may not be right now, and you don't really need the BSP and the Fed to be completely in sync. I think the market pricing in further softness, in further room for Fed easing, I think still gives BSP leeway. But like I said, we're almost at the end. We're almost at the end of the road already.
Yeah, but there's got to be a sweet spot for the peso when you think about balancing imported inflation risks with the need to keep exports and the BPOs competitive. So how does that inform your BSP call beyond the meeting in February?
Look, at the moment, in fact, right now the peso is being helped by the fact that the global dollar environment has been a little bit softer. But when we look at the underlying fundamentals in the economy, you look at the basic balance, you look at the growth trajectory, we still are of the view that, once we get past this big adjustment in the dollar, the peso could still gradually swing weaker and we could still test above 60 level. Now, to what extent is that going to deter BSP? I mean, like I said, BSP is really about inflation and inflation targeting. And right right now, if the demand is still weak, then I don't think we worry so much about inflation. It's just that we're getting closer to kind of neutral levels, and I don't know if there's a lot of appetite to go, well below neutral, because I think inflation has bottomed. And the other thing we need to watch in Philippines is, as you know, oil prices have stayed a little bit sticky. We're still in the high 60s on Brent crude. Of course, we've got geopolitical risk, but part of that is also driven by the cold spell going on in North America that is driving up gas prices. So I think we really need to watch commodity, obviously, rice and energy and what the transmission of pass-through on FX. But at this juncture, I don't think it's a big issue at the moment for the BSP that will deter them to cut. And right now, on the overall growth, the problem with growth is not so much competitiveness of BPO. The problem is really all the ramification of the latest kind of what's happened on the corruption scandal, on government spending and private sector investor sentiment. That's not something that peso can solve.
Do we need to take a look at China, given your work on supply chain reconfiguration and the role of China's demand for the region? Do you think China's still the swing factor for your ASEAN growth distribution? Or do you think those domestic drivers, especially here in the Philippines, have become more important?
Oh, domestic drivers for sure are a lot more important now, because we have to remember China, even though China managed to reach 5% growth last year, it's like only domestic demand is only running at about 3.5 percentage point. Almost a third of the growth is really coming from net exports. So again, China does remain very, very competitive in global manufacturing. If you happen to be an ASEAN country that can link vertically in that supply chain, as China gains more market share, I think the only kind of clear winner there is maybe Vietnam. Or if you happen to be in the AI space, which obviously in Asia, that will be Korea, Taiwan, or Singapore, Malaysia, given the shortage of memory chips. But, Philippines is really not part of that ecosystem. Like, Philippines is really not part of that supply chain in any significant way, whether it's AI or kind of a China-based supply chain.
So
again,
final point, Joe,
Yeah.
now that you mentioned both countries and we're not part of that ecosystem, where are we then in the ASEAN space? Are we like a middling economy?
So, the Philippine story is really about domestic demand. And domestic demand for a while was actually doing relatively okay up until this corruption scandal situation and the uncertainty around that. So really, I think Philippines we need to really watch government spending, because obviously, there's been a big kind of cutback in the second half of this year. So we really need to watch if government spending starts to pick up a little bit. And then that kind of drives a little bit of a little bit more confidence on kind of a domestic investment and spending environment, and maybe the lagged impact of kind of lower rates. But yeah, look, on the remittances, that obviously is always a driver, and that has slowed down. We also need to watch very closely to what extent the BPO can continue to be expanding in an environment of AI adoption, also potentially creating some risks of displacement.
All right, well, thank you so much for your insights. Joanna Chua of Citigroup Global Markets, live from Hong Kong. And you're watching Money Talks. Coming right up, Philippine growth may have slowed to 3.2% in the fourth quarter and 4.5% for the full year. Alvin Joseph Arogo, the FVP and Chief Economist of PNB, explains his forecast after the break. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang, checking in on the markets. U.S. equities ended Tuesday's session a mixed bag. The Nasdaq rose by nearly 1%. S&P 500 jumped by 0.4%, hitting another record. As for the Dow, it fell by 0.8%, dragged by health insurer stocks. U.S. 10-year Treasury yields ticked up to 4.224%, and gold prices posted a fresh high at $5,079 per ounce. U.S. futures point to gains when the markets open later tonight, Manila time. The Nasdaq up by 0.5%, S&P 500 rises by nearly 0.25%, and the Dow advances by less than 0.1%. Asian markets are mixed this Wednesday, with the South Korean Kospi rising 1.5%, Australia's ASX 200 climbing less than 0.1%, and Japan's Nikkei 225 falling by 0.5%. And a quick check on our own markets. PSEI opens this Wednesday slightly lower, 6,303. That's less than 0.1% down. The stock market snapped its two-day losing streak yesterday as investors engaged in bargain hunting. The broader all-shares index inched up marginally, with the sectoral gauges a mixed bag. As for the Philippine peso, it opens today stronger, 58.85 to the dollar. The peso dropped again to the 59 per dollar level, weakening by 11 centavos to close at 59.085 against the greenback. Japheth Tantiangco of PhilStocks Financial attributes the stronger peso to recent dollar bonds issuance, which raised $2.75 billion in foreign fund inflows. Traders are also penciling in a pause in the BSP's easing cycle. 10-year government bond yields have ticked up to 6.042%. The government exploring the creation of an emerging technology board at the Philippine Stock Exchange aimed at helping high-growth tech firms tap public capital. DICT Secretary Henry Aguda said talks are underway with the PSC, the SEC, and the Trade Department to set up the board, modeled after a NASDAQ-style platform for innovation-driven companies. Aguda said the proposal supports President Bongbong Marcos's push to make capital markets more accessible, with policy details expected to be finalized this year. The plan has gained backing from both PSC President Ramon Monzon and SEC Chair Francis Lim. While listing rules are still being shaped, Aguda said around 15 local tech firms have already expressed interest. Market analysts welcome the move, saying a tech-focused board could lower barriers to listing, attracting younger and foreign investors, and make the local boards more reflective of the modern economy. They stressed, however, its success will hinge on strong governance and execution. And in corporate news, Meralco will collect 28 cents per kilowatt hour to consumers starting in March. This comes after the Energy Regulatory Commission approved 31 billion pesos fuel cost recovery sought by 4 power generators. The firm sought to recuperate costs after an abrupt surge in fuel prices in 2022 due to Indonesia's coal export ban and Russia-Ukraine's war. Meantime, PLDT has invested 1.22 billion pesos in Kayana Solutions, MVP Group's newly established unit that manages its data ecosystem. Kayana examines consumer trends, innovates products born out of data assets, and produces a digital concierge with AI. And Robinsons Land Corporation has raised 7 billion pesos from a fresh round of block sale of RL Commercial REIT Inc. or RCR shares. With this, RCR's public float has increased to 8.64 billion common shares ahead of taking over Alliance Global Group's slot in the 30-member PSC index starting February 2nd. Our next guest turns out with the most bearish forecast for Q4 and full-year GDP for the Philippines in 2025 in our latest Business World poll. PNB is tipping for Q4 to come in at 3.2% for 4Q and 4.5% for the full year. The median in the same Business World poll for 4Q GDP is 4.2%, while full year is at 4.8%. Well, with us now for more is Alvin Joseph Arogo, the FVP and Chief Economist at PNB. Good to have you with us, Alvin. Welcome to the program.
Good morning, Cathy, and thank you for having me.
All right, so you've seen that chart. You're at the left side of the screen. That's why we sought you out. Were you surprised that you're the most bearish of them all?
A bit. Maybe let me preface by saying that that forecast was made immediately after the third quarter GDP numbers were out early November. And as we all know now, we are at the onset of a domestic shock because of the corruption probe. And so it's basically a big guessing game for everyone. I turned out to be the most, I would say, slightly more bearish than the next one, but yeah, compared to the overall average below. But as you can see from the chart that you're showing, there's a big variation in
It
the
is.
forecast.
I mean, I'm looking at the variation from your previous. You came all the way from 5.4%. So, what specific data points convinced you to cut this much so soon?
Well, as you know, the corruption probe happened maybe middle of third quarter of last year. I was expecting that the full brunt will happen fourth quarter in terms of the impact. But in the third quarter data, we saw that public construction alone dropped by 26%. In addition to that, we saw the spillover effects on private investments as well as household consumption. So those two were, to me at least, convinced me of those numbers that I produced.
And specifically, that 4Q came in at 3.2% according to your own estimates. And I had to look this up, Alvin. I mean, that was like the third quarter of 2011 when year-on-year growth slowed because of weak exports. There was also bad weather during that time and soft government spending. So how similar or different do you think the conditions are today, apart from the fact that we're 15 years older now?
Well, I had to go back a bit farther than that. So if you recall, this corruption probe is a bit similar to when President Aquino Jr. at that time had his own anti-corruption agenda. And during that period, public construction on a year-on-year basis was depressed for 5 quarters. So I really had to dig deeper in terms of what parallels I can use. But like I said, no, I'm not wishing for the country to grow at 3.2%, but using the recent performance as well as the historical impact of a corruption probe, those were my two bases for those numbers.
Yeah, well, data don't lie when the numbers are right. When the numbers come out in 24 hours, beyond the headline GDP number, which line item are you going to be checking first to validate your call? Is it going to be public construction, private construction, or household consumption, or even maybe the net trade line?
Well, you got it spot on. It's like you read my mind. No? I would definitely start with public construction to see if the drop is as big or even worse than the third quarter. Followed by that, I would look into the second round effects, particularly overall capital formation. So you have business spending, durable equipment investments, and then finally, household consumption, particularly on the discretionary items. Finally, as you probably are very familiar, in 2025, the country benefited from front-loading, meaning a lot of us were expecting that exports would drop because of the US tariffs. Instead, to front-load the impact into 2026, a lot of exporters actually did very well last year. So I'm going to look whether that has tapered off in the fourth quarter.
All right, so how much pressure then does this put on the BSP to ease more versus your view that really the bottleneck right now is on the fiscal execution and also of the governance side rather than policy rate? Because right now it's the BSP hard carrying an economy that's slowed so much so soon.
Well, rate cuts can only do so much. Rate cuts cannot improve confidence. So having said that, I think the BSP will cut one more time, February, and then after that, do a long hold. So in addition to the complications of what the BSP rate cut would do to the peso, if you take into consideration the rate differential, especially with the Fed, I think the BSP has also said that, yes, rate cuts are important, but the problem that we have right now is confidence, public trust, and like I mentioned in the beginning, the rate cuts can only do so much. So they cannot do a lot of the heavy lifting if the problem is something different.
Right, so we go to the fiscal side now. So what would you like to see from the 2026 budget rollout and project pipeline that would make you comfortable of lifting your 4% 2026 forecast closer to where you used to be before the probe hit?
Well, I wouldn't go into details, but I think the budget in 2025, it faced a lot of criticisms, particularly the allocations. So if those things were resolved, then I think that would help. But ultimately, budget is one thing, execution is another. And so there's still a lot of ways to go convincing the public that the money, the taxpayers' money, is going into the right places. So I think it's harder to give an exact medicine for that, no? But we all know what we needs to happen, which is to for public sentiment to improve, to regain trust. No? But how exactly that would happen, only time would tell.
Exactly to your point, I want to see a silver lining here because there's a sudden sharp rebound, sort of a V-shaped recovery that you're expecting for 2027 because you're forecasting 6.5%. How do you connect the dots then if there's a lot of uncertainty with confidence?
Well, the romantic view about it is time would heal wounds. So my view is that if I look into again what happened during President Aquino's time, the depressed public construction lasted for about 5 quarters, and then the sentiment changed from aggressive or very strict fight against corruption to again focusing growth. That's why, if you remember, after the President Aquino's corruption probe, there was the disbursement acceleration program, which led to more or faster government spending. So my view is that the impact of the corruption probe will be harsh, but would be limited to 2026. But given the pain that the economy will experience this year, then the sentiment will turn into let's prioritize growth, accept some leakage, unfortunately, and then the economy will rebound strongly in 2027. But mind you, that's not a structural change. That's only a coming from depressed growth and then rebounding because of that change in the sentiment from focusing on fighting corruption to focusing on growth.
Lots to learn from history. Well, thank you so much for putting that into perspective. Alvin Arogo of PNB. And that is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow at 9:30 a.m. Kapatid, we are One News, all sides, all the time. Have a great day ahead.